Retail returns and overstock flows hitting record levels with year-end cliff worries weighing on consumers. Retailers were already expecting an estimated $63 billion in holiday gift returns, and trading has reflected as much. The S&P 500 retail index fell 3% in the month of December. So what are retailers doing with all this excess inventory, and who is benefiting from it? Joining us now is Bill Angrick, the CEO of Liquidity Services. Bill, great to speak with you. Thanks for being on the show.
Yes, Happy New Year. Thanks for having us.
Happy New Year to you, too. I think a lot of people, average consumers, might not know what you do, but you deal with all of these returns. Tell us what you do with these returns and how you make money off of them.
Sure. Well, we're the world's largest e-commerce marketplace for surplus goods. We work with over 75 Fortune 500 retailers and manufacturers. And this time of year, they're dealing with over $63 billion of goods that are flowing through about 8 distribution center hubs we manage. We investigate these items, inspect them, and put them up online and auction them in bulk on liquidation.com and some of our other channels to maximize value for these large retailers. And I would say this is a great time to be a consumer, but it's a challenging time to be a retailer. We were poised to have a breakthrough retail season. People have been paring down consumer debt for the last 4 or 5 years. But then October we had Hurricane Sandy that really challenged the East Coast. We had warm weather in November, December, which affected a lot of the heavy apparel sales. And then this wall of worry that built during the fiscal cliff negotiation really dampened consumer enthusiasm. So there's a lot of volume in our business today.
In terms of how the business works, though, do you actually pay for that excess inventory, whether it be a retail return or extra machinery from a factory? Do you take that on your books and then sell it so you're on the hook until it's sold?
The majority of our business is on a consignment basis, where we do not take title to the goods but retain a share of the revenue realized from the sale of these itetes. And what drives our marketplace is our buyer base. We're reaching over 2.2 million buyers in 200 countries that have demand for these returned items. One company's returned item is another small business's treasure, and we connect that supply and demand in the most efficient way using our internet-based model.
Hi, it's Brian Kelly. So it sounds like from what you were describing that you are economically sensitive, but almost inversely economically sensitive. As consumers return more, you guys do better. Is that the case, or is that just an anomaly over the last 30 days?
Well, no, I think this is a secular growth in the volume of our marketplace. You know, as the mix shift of retail moves online, return rates grow significantly. Return rates online are about twice as high as traditional brick and mortar sales. Moreover, retail is fiercely competitive, and retailers must provide a convenient returns experience to the consumer to retain their loyalty. So those factors drive the supply in our marketplace. We are counter-cyclical because our buyers are frugal. They're looking for good values that we bring through matching the supply efficiently with this global buyer demand.
All right, and last question, Bill, and that is on December 12th, you had an analyst day, and a lot of analysts then were saying that gross merchandise volumes had to reach a certain level in order for you to hit the low end of the guidance. What did you see in the month of December? Do we see a pickup in returns at that point?
Well, we've seen in our business a brisk volume in our auction count, which has been up 20% year over year. We're seeing increasing interest from large retailers and their vendor base to be more efficient. You know, they're fighting for every penny on that bottom line. They need to use smart solutions like Liquidity Services. And we've grown. We have 1,300 employees in over 25 countries to help these global manufacturers who supply the retailers in the U.S. be more efficient in this market.
All right, Bill, we're going to leave it there. Thanks for your time.
Our pleasure.
Bill Angrick of Liquidity Service, LQDT, is the ticker.